Earlier today on this channel, we covered Section 351, the IRS rule, letting investors roll concentrated stock portfolios into a brand new ETF without triggering capital gains. If you missed it, watch that one first. This video is the real-world example of how that rule shows up in a fund. Retail investors can actually buy. The ticker is ABLS, the Abacus FCF Small Cap Leaders ETF. Here is the elevator pitch. ABLS is a passive, index-based small-cap U.S. equity ETF that tracks a rules-based index of the most profitable small companies in the country, ranked by free cash flow return on invested capital, or FCF-ROIC. That is a quality screen. Instead of buying the entire small-cap universe like a Russell 2000 fund, ABLS owns the small caps that actually generate cash relative to the capital they deploy. The methodology has nearly 30 years of academic backing behind the FCF-ROIC factor. The fund launched on February 18, 2025, and a chunk of its starting basket came in through a Section 351 conversion, which is exactly the rule we covered earlier today. Existing investors holding portfolios of qualifying small-cap stocks were able to seed the ETF in a tax-deferred way, instead of selling their positions and paying capital gains. That is why a brand new ETF can launch with a curated, concentrated lineup on day one, rather than spending a year building positions. Net assets as of May 5, 2026 are roughly $1.25 million. That is a small fund. I am not going to sugarcoat it. Small AUM means three real things you should know. First, bid-ask spreads can be wider. Though right now ABLS is trading at a 0.20% median 30-day spread, which is reasonable. Second, daily volume is light, so large limit orders are smarter than market orders. Third, very small ETFs occasionally close if assets do not grow, and investors get cashed out at NAV. That is a real risk for any fund under $10 million in assets. On performance, the fund has been live for a little over a year. The 30-day SEC yield is 0.78%, which makes sense. This is a growth and quality strategy, not an income strategy. Top holdings as of the most recent disclosure include PJT Partners at about 3.7%, Commvault Systems at 3.5%, and Artisan Partners at 3.4%. The portfolio is concentrated by small-cap standards but broadly diversified across financials, technology, and industrials. Who is ABLS for? It is for investors who want small-cap exposure but do not want the full junk drawer of the Russell 2000, where a meaningful chunk of companies do not earn money. If you believe quality compounds over time and you want a systematic FCF-ROIC tilt instead of a market cap-weighted small-cap index, ABLS is built for you. It is not for short-term traders given the small AUM and light volume, and it is not a yield play. Bottom line, ABLS is a small, young, factor-driven small-cap quality ETF that used Section 351 to launch with a real portfolio on day one. Watch the fee waiver expiration, watch the AUM growth, and use limit orders. If today's Section 351 video helped you understand the why, this is the what.